Sure, Robert. I'll get you there in a second on your question. All right. Let's get started again. We're starting with a disclosure here. I'm an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. And here is my position disclosure. Again, everyone who's in the VTF can just see this there on the virtual trading floor. The Pro Desk VTF is where it's at. Gotta leave this up for a full 10 seconds and then we can get into the meat of today's meeting. Thanks, Greg. All right, cool. All right, so really impressive day today. Let's talk about this market. SPYs here closing up 0.66%. Oh, thanks, Josh. Qs here closing up about 0.5%. IWM 0.2%, still below the key 222 level in the IWM that we have been discussing. All right, so let's review this morning's team game plan and kind of how it worked out. So if you all remember, we were set for a relatively small common gap up in the market pretty much across the board, SPYs, Qs, and IWM. We had also spoken about pre-market, what the TLT was doing. Let's actually go to pre-market price action here. So again, professional trading account, can see going back to 4 a.m. But you see here starting at 7 o'clock, the TLT started upticking. It went from negative where it was pre-market to positive. So basically that means that interest rates were set to be up and then interest rates were set to be down. And you can literally see pre-market at 8 a.m. as interest rates were going down, the IWM start ticking lower as the NASDAQ literally doing the opposite starting at 8 a.m. and starting to tick higher into the opening print. So early on pre-market, once again, the IWM was showing relative strength to the NASDAQ, but by the time the market opened, that was more or less gone. So we were set for common gaps to the upside in a bull market, and they were small. And generally, that's not something where you need to be too cautious. If the gap is a large gap to the upside, then we always want to be really patient because we know that the market's a bit extended on small time frames. But a small gap on a bull market's usually not that bad of a thing. But we were concerned about yesterday's candle for the SPYs, Qs, and particularly the price action there for the IWM we had spoken about as a little bit of a problem. So everything closed really weak yesterday. The last hour of the trading session was particularly weak. You can just see that here in the SPYs, 3 p.m. to 4 p.m. yesterday, basically a straight line down, followed by a gap up this morning. One of the bigger concerns that I had referenced was these three tails in the IWM. 222 we had identified as kind of a key resistance level for the Russell, and 3 days in a row it tried to get above with opening early day rallies, and 3 days in a row it rolled over and completely failed, which was obviously a huge disappointment. Thanks, Justin. Thanks, Jerry. I'll work on that with the tech team. And thanks, Chris. I appreciate the compliment on my T-shirt. Anyway, so this is the Russell chart. We just did not get what we were looking for, and the rollovers 3 days in a row was definitely cause of concern. With that said, as long as the IWM is on a closing basis holding above 218, I think it's still okay. And on an absolute basis, you've got this pivot low of the consolidation pattern here at 215.38. So given the weakness in the close the past 3 days, today's game plan into the common gap up was to be patient. We don't want to be doing a lot of short selling right now. Why don't we want to be doing a lot of short selling right now? Well, here you go. Just look at the SPYs. Look at the Qs. They are extremely bullish. But given the weak close yesterday, we also don't want to be doing too much aggressive buying into this gap up after a weak close. So we identified some key support levels to pay attention to. We talked about 436 in the SPYs as a low of this consolidation. The absolute pivot low of the consolidation coming in on July 27th. This is the SPY chart. We spoke about the absolute pivot low of the Qs here. The Qs are really more actually of a what's called a bull pennant pattern. So again, bullish pattern, it's a tightening pattern. So you can see within the confines of the pattern, you've got higher lows and lower highs. The most recent of which is 362.41, but I think the more important pivot is actually down here about 360 in the Qs. So 360, major spot to pay attention to. So what happened this morning? Again, big picture game plan today was just to be patient because we're having a small common gap up in a bullish market after a weak close. We're patient. 436 we identified as the key level in the SPYs. Opening selling here in this market was very concerning, but we were extended into this test of 436. It held it perfectly. The question really, as you hold this 436 the first time because it's extended into it, is are you just going to get like kind of a shallow bounce off of it that becomes another lower high on the small time frame chart that then leads to a break of the daily level of 436. That daily level of 436 breaks. I know you get the 21 EMA right beneath it at 435, but that could really start a feedback cycle of selling in the marketplace that could really cause us to roll over. I think that would have been really detrimental if we got below 436 and held below 436 today. And guess what happened? We got to that support level and the bull market once again held itself as the bull market and we just totally rallied up. I am not surprised at all that we held support in a bull market. That's exactly what's supposed to happen. The only thing I'm once again surprised about is actually the degree of the bounce. The degree of the bounce here is really impressive. I remember saying to you guys at 10:20 when we got this really strong 10-minute bounce, I was like, I'll be happy if we spend the rest of the day just kind of chopping sideways and consolidating here and maintaining this bullish daily picture as we once again tested and held support. And the market exceeded my expectations again. Beautiful continuation 11:30 that turned into this grindy trend that had us close at highs. Now the upside points I referenced in the marketplace in the morning meeting, I didn't think we were going to break those today, and we pretty much did. I'm talking about 441 in the SPYs here as the key upside level that needs to be broken for continuation. We closed basically right at that. And for the NASDAQ, this area between yesterday's high and this kind of other last pivot high. So basically the area in the Qs between 367, we'll call it, and maybe as high as like 368 or so needs to get cleared. So again, not surprised at all that the market held support. It's a bull market. Just surprised at the degree of the bounce, and we basically closed right at these really key levels that the market wants to break to get continuation from the SPYs and the Qs. IWM, the Russell's still more neutral. It's still below that key 222. We need the Russell to get above 222 on a closing basis, and that'll start looking a lot better. So, again, for today, I think it was a less is more type of trading day. There was some opportunities to come in and buy, like with the SPYs, as they were testing that support area. And there was a couple other trades here that we spoke about in the morning meeting that worked out really well. First of all, this snow. Snow was on my radar for the break of 270, and I took this trade and I lost a small amount of money on it on July 29th, which is the last time it attempted to break the pattern. So basically I need to see 270 on a closing basis, so close above 270 and trading above 275 on like an absolute basis is what I'm looking for. And this is a beautiful pattern and a great chart, right? So you got a fantastic chart here that bottomed out back in the middle of May along with a lot of those other speculative type names, and then since then built out this really good looking bull wedge. So again, this is the chart of snow. I actually almost forgot about this, even though I traded it. I guess that was Thursday last week, and I lost a small amount of money when it had kind of a breakout failure. And one of you guys put it on the radar. I think it was David. This was a perfect breakaway gap. It actually opened up above. I know when we were doing our morning meeting, it was still trading, I think, a little bit below 270, but it opened up above 270. So that makes it a technical breakaway gap, right? A breakaway gap is when you are gapping above a resistance level or gapping below a support level. Breakaway gaps tend to lead to gap and goes. So basically the supply and demand dynamics of a breakaway gap tend to lead to continuation into the direction of that gap, as opposed to your more typical area gap or common gap that actually does the opposite. The supply and demand implications of a technical common gap usually lead to a gap fill. So why do breakaway gaps tend to lead to gap and go situations? It's because new money wants to enter the market. Everyone wants to be involved on this break at 270. I wanted to be involved in this break at 270. That's why I traded it through that area a couple trading sessions ago. And also anyone who is short and is using these tail highs or this 270 area as their general stop loss area, the shorts are getting squeezed as new money is coming in. So what you tend to see in breakaway gaps is you see a gap and go in the direction of the market, and that's exactly what happened here. This snow was a beautiful trade. It had all of our confirming factors that we're looking for. Amazing opening volume. Yeah, I know. I can't do anything about it. Amazing opening volume here for continuation. This is exactly what we want to see. It was just a phenomenal trade. You just have to be ready for it. You have to be ready for it off the open. Because honestly, if you looked at this at 9:36, it's too late. You missed the trade. And those, by the way, are my favorite type of trades. My favorite type of trade is the trade that goes in the first 5 minutes of the day, and you either were ready for it, you got stock, or you don't. And it's not going to let the people in who weren't ready for it. That's always been my favorite type of trade, and I've always found that the best trades in the marketplace only really give you one opportunity to get stock. You had the first 1 to 2 minutes of the day to get stock in snow. You weren't ready for it. You weren't paying attention. You missed it. You're never going to get the opportunity again. That's literally how the best trades in the marketplace work. So snow was solid, and then I got to talk about what hood is this. This hood was incredible today. I have spent the last couple of days talking about how I do not think that this hood is a failed IPO. I love this thing as a trading vehicle. I made money on it the last 3 days in a row, and I did not make any money on it today, but I know some of you guys did. Brant brought this as an idea to the table today for the buy through 38. I gotta tell you, Brant, I wasn't really a believer in it, but I'm glad that you were calling that out for the team, and I know some of you guys did really well with this. It was a phenomenal trade. I'll tell you why I wasn't a believer in it, and why I just wish I had a little more information, honestly. So $38 is the IPO price. So you have all of these retail investors who have stock in Robinhood from $38 who spent the last 3 days out of the money listening to CNBC tell them about how this was the worst IPO of its size of all time, which again, as you guys all know, is something I completely disagree with. So that made me think, my thought process was, well, all that retail money is literally just gonna be posted on the offer at $38 because they can't believe that they got in the stupid Robinhood IPO, that they got hoodwinked into it by Robinhood, and if they could just get out at their price and not take a loss, they'll be so happy. That's what my thought process was, because that is how I think retail money tends to think. It's I always talk to you guys about putting yourself into win-win situations versus lose-lose situations. Right, a win-win situation is when you're following your game plan, you get that one-to-one kick, now your trade is risk-free, and then you're looking to maximize your reward. That's a win-win situation. A lose-lose situation is what a lot of retail money does. They buy stock, they don't manage risk, the position goes against them, they hope and pray it comes back to their price so they can get out without a loss. And again, that's a lose-lose situation. You're either gonna make nothing or you're gonna lose a lot of money. What I didn't know until this afternoon was that if you're on Robinhood and you go to try to sell the Robinhood that you got allocated to you at $38 via the primary market, that you're getting a big warning thing coming up basically telling you that you can't sell the stock. I mean, you could sell the stock, it's not a full restriction, but Josh showed me a screenshot from, I guess, one of his friends that tried to sell Robinhood today, and it was, just so you know, if you sell Robinhood within 60 days of the IPO, you are restricting yourself from getting IPO allocations of future IPOs for the next 60 days or something like that. So you probably have all those same Robinhooders who maybe some of them still did sell their position, but a lot of them saw the warning come up and they were probably like, oh my God, I can't sell Robinhood. Maybe they didn't even realize that those restrictions occurred. Maybe they did. I don't know, how well Robinhood was, providing information on IPO flipping. But if I knew that, it actually would have made me tremendously even more bullish on Robinhood. I like the Robinhood stock a lot. I like the IPO. I traded it successfully the last 3 days. I decided to take a step back from it today because I thought it was going to be running into resistance at 38. It cleared that resistance. The sellers were nowhere to be found. The people who were coming in trying to short this thing, which I, didn't really agree with, were getting squeezed. And I mean, the move on this was just incredible. The only thing that's of interest to me, so now separate from Robinhood, I consider Robinhood immediately to be in one of those speculative names. Is what legal, Charles? So I immediately consider Robinhood to be one of those speculative type stocks, those like high multiple speculative type names. We have a list here as a group that we've spoken about many times. That list consists of the marijuana stocks, it consists of the 3D printing stocks, it consists of your plug and your fuel cell and your Jumai, your Fubo, Palantir, all those stocks that are traditionally names that kind of lose money, but they're kind of in that growth category. Yeah, it's definitely legal. I mean, sorry, there's a question in the VTF for people who don't see the virtual trading floor asking for more clarification on the IPO flipping. So there are supposed to actually be penalties against the investment bank if your clients are flipping. And they generally don't want them to do that, but if you're a big enough of a client of the investment bank, then they're just going to let you do it anyway. And I know people who are professional IPO flippers. They just do a ton of business with Goldman Sachs, JP Morgan, Morgan Stanley, whoever, so that they can get allocations of IPOs, so that they can flip them on the first day for 25%, 40%, 80% profit in that absolute first day. Again, it's something that's not illegal to flip IPOs. It's generally something that's frowned upon by the investment banks. Exactly what Lee just said here. Lee, who recently passed his Series 57, he knows all the rules and regulations by heart. Flipping is not an SEC or FINRA violation. That's correct. It's just generally something that is frowned upon. So again, here with Robinhood, they didn't say you cannot sell your shares. They just said that if you sell your shares, we're going to potentially penalize you by not giving you access to other future IPOs. But that's enough for people to look at this and potentially get scared, I think, because we're talking about people who are in Robinhood are primarily not as sophisticated, who I think are going to lead to then not selling their stock right now, and they're going to just wait for it because they see that warning pop up when they're trying to actually, liquidate a position. So I think that all of that led to just this fantastic move here for Robinhood. And again, my surprise is really more that this performed so well, and I understand that it's a recent IPO, so it has the dynamics of a recent IPO, but all the other speculative names that are kind of in our list have really not been performing well. I mean, we can type up some names. Palantir's in this tight consolidation, hasn't been doing anything, but it's still down, $5 from this high at the end of June. You got Jumai not doing anything, was actually very weak today. It's at $21. This thing here was just at $32 at the end of June, about a month ago. We can look at maybe a Triple D that actually has had a better bounce, but still, 3D printing name here. This stock was at $41.50 at the end of June, and now it's sitting at 26 and change, and that's after a $2.50 bounce. Tilray's maybe a little bit different because it had a really strong initial bounce on its earnings report, but even with that, down significantly from its June highs. This SoFi was a disaster today. I was so impressed by just how weak SoFi was. IWM, SPYs, Qs, everything turns around, and this SoFi just absolutely could not catch a bid to save its life. What about like a plug? Some of these I haven't even looked at today. I'm just going through them with you guys for the first time. You know, same thing. Plug up at $35 at the end of June, sitting here at $26.30 here towards the end of July. So, you know, those are pretty big pullbacks on a percentage basis, and I would expect to see the more speculative type names, if they start really catching a bid, then I would expect to see some of these other stocks start to catch a bid as well, but they haven't been able to do it. The IWM hasn't really been able to do it either, to be fair. A lot of times they do trade with the IWM, even though they're kind of sometimes different companies than what's actually in the Russell. It's just a little bit more of a speculative space that kind of tends to trade together. So that's pretty much all I got for you guys today. You know, Hood call out from Brandt through $38. You know, phenomenal trade today. Snow call out, phenomenal trade today. The game plan for us as a team this morning was right on point. Being patient in the beginning of the day based on these technicals, and then, you know, waiting and being patient and letting support come to us, and that held perfectly. And again, the biggest surprise to me is just the degree of the bounce today was tremendous. So with that said, I'm happy to answer any questions you guys have. I do got to try to get out of here and end this meeting around 5 o'clock today, because I've got boxing tickets for Madison Square Garden. One of my buddies is fighting at the Garden tonight, so I got to get over there and see the fight. So scrolling up here on the VTF, let me try to figure out if I can do this a little bit differently just on this chart. Still just going through some kind of growing pains a little bit on learning some new technology that we're using to broadcast a little bit differently. I think that might be a little bit better on the charting. Okay, so the first question here we got from Robert. Under Armour. Under Armour was also named from the meeting this morning that pretty quickly got off my list because I did not like the price action. So with our game plan today, we talked about UA and UAA. They were trading on earnings. So first of all, I can talk about a couple of these earnings names. Before I get into Under Armour and answer your question, let me just talk about Discovery real quick. I thought that the Disca earnings were solid based on the report, and I only took a peripheral look at it. You know, again, I describe my trading approach as probably 85% technical, 15% fundamental. So as much as I thought that Discovery could be a buy today and break out of this, you know, descending channel that it's been in ever since the Archegos kind of hedge fund blow up, I know some fundamental guys who love Viacom, love Discovery at these prices. This stock just has not been able to get out of its way. But I thought with a good earnings report, if this thing could technically clear this inside day to the upside, start breaking this wedge, it could start rocking and rolling. So when we did the morning meeting today, I put an alert out for myself at like 29.40, figuring my trigger was 29.60. 29.60 is my buy price. Discovery, I'm seeing the volume come in, the momentum come in, it's trading on earnings. That's where I want to get in. And what happened? I don't know what happened. They crushed this stock. And guess what? I don't care, because I don't have a position in it, because I never got triggered into my position because it never actually triggered. So this is why we create trigger entry points. You know, a lot of the approach to trading, and this is a great way to think about markets in general, is to think about the market in terms of if-then statements. Because technicals, the study of technical analysis is the study of human behavior. So if you think about it in terms of if-then statements, if snow gaps above 270, then I expect the supply and demand dynamics of a breakaway gap to lead to an intraday trend in higher prices. If Discovery breaks 29.60 on good momentum and good volume, I know the market loves the earnings report. It's clearing key technical levels, and that can become a feedback cycle of buying as shorts get squeezed and new longs enter the market. But guess what? If it trades through 29.60 never actually happened. So then there is no then. And for me, it's no harm, no foul, because I never get into the position. So, you know, this is why we come up with those kind of trigger price entries. So let's take a look at Under Armour, because I know that this is one that we also spoke about in the morning meeting today. I think we were talking about 29.50 for Under Armour, and for UAA, which is the other class of shares, I think we were talking about what price? 22. don't remember if we're talking about 22 or 22.50, to be honest. It's interesting to see. Yeah, it's interesting. So I know that I don't know Under Armour very well and what separates the Class A shares from the Class C shares. Maybe someone could do a little research for us on that. But I would assume it has to do with voting rights. But it's interesting to see that one traded better than the other today. But anyway, going back to your question here, Robert. With our game plan on Under Armour today, long above 19, we didn't get volume confirmation at the open. But then can we wait until we fade the gap down, catch the EMAs on the 15-minute, it's 20 minutes. If we make the pivot on the EMA, start building our position, even if we broke the day's lows from the open, would you be okay with that? Okay, so I think I understand your question. Let's look at the small time frame here. So again, Under Armour, we know that key level is like 19 to 19.50, right? And what do they do with this thing? They open it up basically at 19 and they immediately sell it. Honestly, if you bought Under Armour at the open, at or above 19, and you took a quick loss in that, I would actually be totally fine with that. Because it looks like it's opening above your level. You're coming in, you're buying, you want to see the momentum come in. It gets below the level, the momentum does not come in. You stop yourself out quickly for small loss. I actually think that would be a really good trade. So we know that gap fills do sometimes act as support. I don't like that on the earnings trade. I like a gap fill intraday support is something to pay attention to more on like the market itself for stocks that aren't in play. You know, the thing about trading earnings names, and I've spoken about this a bunch of times, your general rule for trading earnings is that you just want to trade them in the direction in which they're moving. You do not want to, I think, do an over-analysis of the earnings report. I'm not saying don't do an analysis of the earnings report. I'm not saying that the earnings report can't give you a thesis and expectations for what the stock can or should do. I'm saying that we don't want to do so much of an analysis of an earnings report that we become blind to risk because we believe that it beat on whatever metric and it has to go up. Because we've seen countless times, including Discovery today, where that just happens to not be true. So I really don't like buying this Under Armour anywhere in this area, to answer your question. First bar here is straight down with momentum. Second bar looks like an inside candle. Third bar looks like an inside candle. We call that a shooter. And then the shooter breaks down. That's bad. Fine. It finds some support here on about the gap fill, but there's no hammer candlestick here. There's no inside and up. I don't see anything in here that is even a counter initial movement trade that you could even consider putting on a 5-minute chart. Let's just check the 15 real quick, and same thing with the 15. I honestly, Robert, to answer your question, I don't see anything here on the 5 or 15 that would get me excited about this in any way. I don't like this opening selling momentum. They rejected it again at 19, and even when it breaks here on volume, and I don't know what was going on here, maybe it was the conference call was ongoing at that time, and that's why the volume came in so big. Even then when this thing actually really breaks on volume, I still don't like this as a trade. I don't like the time of day. I don't know what's going on. I don't know what's causing this unless we saw the news hit the VTF or something like that. I think that basically this opening candle, you know, the same thing with kind of Discovery, right? Discovery just opens and fails. Under Armour basically opened and failed, and I think you just take it off your radar, and it's, you know, no harm, no foul, because you never get triggered into some of these positions, and you just kind of move on with your day and you try to focus on other things. And unfortunately, maybe you end up missing snow because you were focused on, you know, Under Armour or Discovery and watching that really closely off the open. If that's the case, that is totally fine. It's totally fine. You know, like I always like to joke around that they're not Pokemon. You can't catch them all. It's just, you know, inherent in the business. But I hope that helps there, Robert. Scrolling down here for the next question in the VTF. Does anyone know how many shares Hood gave to the commoners? I think it was about 30%. That's what Gabriel's saying here also. Rich here posted our list in the virtual trading floor of the speculative names: Tilray, Triple D, INSG, Skills, AI, Sumo, Plug, Fuel Cell, Jumai, Monster, Lemonade, Palantir, Lots, etc., VLDR, CCIV, and some others. Thank you for that, Rich. from the other Rich. We got two Riches in the VTF now. You once said that level 2 tape reading isn't as important anymore. Can you please explain why? The only reason I've heard was because people can just hide their order numbers. I noticed that during the first 15 minutes, you always know the flow, so that dictates which direction it's going. So isn't that really important? Sure, so the question here is from Rich on tape reading. Okay, so I can just bring up the market maker of Hood because it's up right now and it's still trading after hours here. You know, so we can see the depth of market here for the data that I pay for. I've got ARCA depth of market. I've got NASDAQ depth of market. I can see, you know, inside bid and offer for BATS, EDGX, EDGA. So this is the level 2. So bids, offers, tape. When I first joined T3 in 2010, it was a very different market. There were tricks, if you will, where you could make money purely from the tape. And if you asked me back in like 2010, 2011, and this started to change probably mid-2012, if you asked me in 2010, 2011, if I could have charts or tape, if I could only have one, which it would be, I would say take away my charts. I don't need them to make money. Just give me the level 2 and the tape. Somewhere around mid-2012 that started to change, and then definitely by 2013 it had completely changed. And that's just become more and more and more over time. Charts, and I'm telling you this as someone who I consider myself to be good at tape reading. Josh, wherever he just went, Josh says I'm the best tape reader that he's ever seen, so I appreciate that as a compliment because Josh has been in the industry for a long time. I'm the first to tell you, you're a new trader, learn technical analysis. Learn true technical analysis, not just memorizing chart patterns. It's so much more important than learning tape. All the old tricks that I used to use back then are all gone. I don't teach them to anyone. They don't work. They're not there. It's a waste of time to try to learn strategies that do not work in the market as it's evolved. It doesn't mean that tape reading is completely useless. Tape reading is useful in certain situations. It's very useful in IPOs. When an IPO first hits, there are no charts. It's all tape. The tape tends to trade very pure. Tape reading is also very useful if you're trading earnings after hours. Trading Apple right after it reports, or something like that. Microsoft right after it reports. You know, stocks that are really moving after hours on earnings reports. It's useful, and that's because in those specific situations, the algorithms are not as powerful. You have a lot more hand traders who are trading the market at those specific times in IPOs, after hours. You know, stocks have algorithms that are specific for that stock even, and you don't have that yet on a brand new issuance, a brand new IPO, because it's not there. It can also be sometimes important with news, and it can also be important with execution. If anything, I think that the most important thing, and this also has to do with routing a little bit, and this is not advanced tape reading, it's very simple tape reading, is to know that if I wanted to have a bid at 12 cents, I wouldn't put my bid at ARCA. Basic stuff. If I needed to have a bid at 12 cents, I would go NASDAQ, right? Because there's 5,500 shares right now at 48.12 on ARCA. If I join ARCA on the bid, then I will be last to get filled after the other 5,500 shares. If I go NASDAQ, I can potentially jump the line and buy my stock prior to that bid, which just got filled. You can see that here. That's the A. These are the bids. You got taken out. 1,100 shares, 3,100 shares, 1,200 shares, 200 shares. Bam, 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 bam. They took them out. It was like whatever, a relatively small bid if you consider that it traded 89 million shares so far today on the trading day. So there are special circumstances where tape reading helps. It's also helpful, I think, from an execution perspective for sure. I mean, again, but it's the basics of tape reading that are important right now. Knowing that there's a 13-cent spread, right? Knowing the bid and the offer right now. Knowing how to route orders. So I have a routing class that should be posted in the training program classes soon. Once my man Dylan, I don't know if he's listening, is done helping me edit it. That's the stuff that you guys really want to know. The stuff that can help you with from an execution perspective. Outside of that, Come to me when you are a master chartist, and then we can start to add in a little bit more tape reading skills to what you're doing for IPOs. The market's just changed. There's so much fake liquidity in the level 2. There's so much nonsense that's going on here that wasn't there in the past. I mean, do I still read tape? Absolutely I do. I can't help myself to not do it. I really don't make decisions on it anymore. Again, I might make a slight altercation to a bidder offer, but I really make very limited, if any, decisions anymore based on tape. Once in a while, I might throw a scalp trade in and like a new IPO. It's harder to read than it ever was. There's fake liquidity. The algorithms are disguising what they're doing, which we can too, by the way. You know, if I wanted to put a 1,000 share bid in right now, and I pressed enter, this would be a refreshing bid. So it'd be a 1,000 share bid at 47.96 that would come in on ARCA, but it would only show 100 shares that would actually be there. See, there it is. This is a 1,000 share bid right now that I'm going to cancel very quickly because I don't want it to get filled. But you can see, look, bam, I'm only showing 100 shares, but I'm actually there to buy 1,000. That's a refreshing bid. We can all do that as professional traders here, and I will do that myself. I wouldn't do it in Hood. Hood's too liquid, I don't need to. But if I was trading, you know, some of the thinner stocks I'm involved in, like I would never show a large bidder offer in Coursera. It's too thin. If I was going to show more than 500 shares in Coursera, I would refresh it because I don't want the algorithms to actually see my order. Because the algorithms are going to do to me what we used to do to the other hand traders that existed, which is kind of front run them. It's also important just for kind of understanding liquidity. Like right now, here's 11,000 shares that just came in at 48.06. So if I was long 5,000 shares and I needed to be able to get out, I need liquidity to be able to get out, I'd go, okay, look, here's 1,100 shares. I can hit out into this 06 and liquidate my position and probably get little to no slippage because that bid is there. But it's just tape reading. Look, I would love a market environment where tape reading was more important because I have the skill for it. It just isn't. So, you know, focus on the charts, Rich. I hope that helps with your question. Mike here, I had a good day today, but I still made several execution mistakes that I would like your take on. I did this 3 times today, but here's an example. Wanted to buy pins on a 5-minute breakout at 255. A 5-minute breakout at 255. Okay, right here. The break of this little bullish consolidation pattern. I placed a buy at the offer, and then 3 more buys at 01, 02, and 03 below, and never got filled on the other bids because you were trying to be cute. So then at the end of the day, I just closed my 100 share position with a nice gain because I did not have enough profit cushion to keep it overnight. Okay. In 01, 02, 03, that was the actual bid prices that you were putting in, 01, 02, 03. Because I don't see here at 255 it traded 58.74 to 58.92. So it was never at prices that were 01, 02, 03. So look, I'm actually a big advocate of providing liquidity whenever possible, and I would actually have to see the situation in real time to be able to give you better feedback on this. Thanks, Pat. Thanks for that information. I would actually need to see this in real time to actually be able to give you better feedback on the execution here. But based on the chart here and the situation, this is actually a situation where I would rather put bids in than take the offer. The only time I really want to take the offer is on pure momentum trades, which are usually more like daily breakouts. I know you're referencing this as an intraday breakout of a 5-minute consolidation pattern, but to me that's not so major that I can't bid into stock. You just might have to pay up a little bit on your bids at certain points if you're not getting filled right away. So again, a little difficult to give me too much feedback on the actual execution there without seeing it. But generally, I don't think you needed to do 1 bid at 01, 1 bid at 02, and 1 bid at 03. You could have just gone inside bid for all the stock that you wanted to get, all kind of at once, and not spread it out. There's no point in going 02, 03, 01 like that. So I hope that helps a little bit. I don't really have anything else feedback-wise for you on it. People like my background. So my background was actually made by one of my traders. I need to change it. It's been up here for too long, but I don't do that very much. It's just, oh, where is it? What it says right down here is something about got that Tesla short. It's based on a time in my life when I was trying to fight Tesla to the short side and it was going higher. And one of my traders was kind enough to make me a backdrop to let me know that I should not be shorting Tesla. Joey here, seeing mRNA and Hood. I'm realizing that popular names that are making all-time highs can just keep going. AMD also. Yeah, I mean, look, this is why we always talk about an extended stock can become more extended. Really particularly, look, Moderna was not extended coming into the open today. Moderna opened up, this is an ascending bull pennant pattern. This is a bullish pattern. Moderna did exactly what it's supposed to do today. It opened up just above the 80 MA on the daily chart. This is healthy price action to me. Not AMD is different. We'll talk about AMD. I'll bring that up also. This is healthy price action. This is just a bullish continuation of a bull pattern as the stock is potentially getting hit with news that could be particularly good for it. Hood as well. You know, Hood broke through 38, had a really big move today. I got a feeling that was at least partially a short squeeze. But this to me isn't necessarily too unusual. AMD is different. This AMD is insane. 5 days in a row of that price action is sick. Completely sick. This is an example of an extended stock becoming significantly more extended as time goes on. This is an example of what momentum looks like. High prices can become even higher. So that is AMD. I think is a little bit different than Moderna and Hood. This is nuts. I mean, this. I don't have anything else to say about it. There's no setup here, by the way. I would actually deem it irresponsible to have bought AMD in any of the last 3 days for anything more of a very short time frame day trade. It's just too, we don't buy stocks that are this extended because you have a lower probability of success and a worse risk reward. And I don't care that it went from 104 to 114 and you could have made that $10. If you bought AMD at 104 3 trading sessions ago for anything longer than just a short-term trade, it's an irresponsible trade. This is not what makes you money in the long run, even though it did here, because an extended stock can always become even more extended. Aaron here. I propose a class on how to read earnings reports. I have a general understanding, but would like to hear from our leaders. Not how to trade them, only how to read them. Maybe we can ask Stefan to put that together, because he'd probably be able to do a much better job than me. For me, Aaron, I can tell you the answer real quick. I look at just a couple of things very peripherally. So first of all, Pat does an awesome job getting all the news on all the earnings reports into the VTF, pre-market as they're happening. I read through every single one of them. I just read the information that's provided. So first you have earnings, did it beat or miss? Then you have revenue, did it beat or miss? Then you have, probably more importantly, expectations. Future earnings expectations, future revenue expectations. Beat or miss, beat or miss. I also look for buyback, dividend news. That's generally it. Sometimes stocks couple that with other one-off pieces of news, which you got to take for itself, but that's generally it. If I can see a stock that beat all 4 of those factors, again, beat on earnings, beat on revenue, guided earnings higher, guided revenue higher, all 4 of those are above expectations, it generally looks like it's probably going to be a good one today. Generally. Doesn't have to be. It might be, it might not be. Again, that's the price action, but you told me specifically not to talk about price action. That's all I'm looking at. Buyback. Oh, they increased their buyback? Well, that's fantastic news. Okay, so now, in the same way that we look at layers of probability for technical trading, we can talk about kind of layers of success on an earnings report. So what would like the ultimate earnings report look like? Beat on earnings, beat on revenue, guided higher, initiated or increased a buyback, initiated or increased a dividend. Everything that would be like an A+ earnings report for me. Maybe one that's a little bit more mixed. So I view guidance typically as more important than actually if they beat or missed the last quarter, because the market's a forward-looking mechanism, so it tends to care more about how a company is guiding than what the company actually reported, right? So If I'm looking at a company that missed on earnings, kind of missed on revenue, but they guided higher on both, okay, that one is still good. That one's still pretty solid looking, but maybe not as good as the one that obviously just beat and crushed everything completely and utterly across the board. But that's basically what I'm doing. Like, and again, like I thought that the Discovery earnings, from my peripheral view of it, look great. Maybe someone can repost it. Maybe I'm wrong on this because I look at so many every morning now because we're in earnings season. But I'm pretty sure they beat on all those metrics, right? So I said to myself, okay. But for me, again, if it just beat on stuff, it's still not enough for me to trade it. I want to combine then the daily technicals with that. I get excited when I see something that I think beat everything across the board. I think that earnings report from my just basic periphery look at it looks fantastic, and there's a technical setup that's triggering. So again, Discovery was one of my ideas today on a break of 29.60 because I thought on my peripherally look that the numbers were fantastic. 29.60 would be a technical trigger. And guess what? The market is smarter than me, and it didn't like it, and it sold it off all day. So it is what it is. But I definitely would have had significantly more conviction on a break of 29.60 today because of that earnings report than I would have on any other just kind of typical day. So hopefully that helps a little bit, Aaron. That's literally all I'm doing. I'm trying to combine the stock being in play, with a technical trigger. Diego here giving us some feedback. Trigger points and entry strategies are huge. I'm still working on mine, but you can't trade without them. Totally. Rich asking if everyone has hit the like and subscribe button for the afternoon meeting that's going live on YouTube. So hopefully everyone's doing that. Will bringing up DOCN. I know this has been a Will name, I think going back to yesterday. So, great trade yesterday, gave beautiful continuation through today. So good job there, Will. Keep the good ideas coming. Appreciate having you on the team. Yeti was another one that someone mentioned in the morning meeting. That's right, for this break above here, and I think that this one was also trading on its earnings report, right? I don't really recall, but maybe you can remind me. So that kind of trigger above 99 today looks like it was decent. Thanks, Jonathan. Diego talking about trailing strategies for Hood. Absolutely, we want, the trailing strategies are how we get reward maximization. Yeah, Will giving some feedback on my comments probably about the tape, because Will here was one of my OG members of the trading desk back in what was 2013 or so. It's back when it first got started. Gabriel asking why his level 2 doesn't have as many orders as mine. So again, it's a little bit based on what you pay for, but all of you guys, if you're a professional trader with T3, you're all at least paying for depth of market in NASDAQ. So right click, go to settings. Nope, right click, go to settings, and make sure that ARCA is checked. Sorry, not ARCA. ARCA's not going to be there for you unless you're paying for it, which I don't think really many of you are. I pay for ARCA. Make sure that NASDAQ, so again, let's do this again. Right click on your level 2, go to settings. It should say NSDQ, make sure it's clicked, make sure it says 30. And then you should be able to see the 30 inside bids and 30 inside offers on NASDAQ. If you can't, sometimes there's a little glitch there where it gets locked up. Email our trade support team, tradedesk@t3trading.com, and they will help you out. Can you talk a little about your support lines? I'm starting to run out of time, but I always want to get through everybody's questions. So I'm just going to say no more new questions because I got to get to Madison Square Garden for the fights. But I'll answer what you guys still have in here. From Brian here, can you talk about your support lines that are moving up on the day? Had several trades I bought at the top as the indexes moved. Brian, I don't have support lines on my chart. I have moving averages, and I can talk a little bit about that, though I definitely would reference you over to my training program classes. I know you're new on the team. If you haven't watched my training program classes, particularly the game planning class, I get into detail in the game planning class, and I think also in the candlestick class, on how I utilize an 8 and 21 EMA for my trading, what they mean to me, and why they're important. First thing I'll tell you though, these are, see you buddy, these are not support and resistance lines. Moving averages are not support and resistance lines. I don't buy because the stock's at a moving average. I don't put a stop at a moving average. They are literally averages. They're just squiggly lines composed of the closing price of the last X amount of periods. I use an 8 EMA and a 21 EMA very actively as a tool to tell me equilibrium, technical equilibrium. I consider the technical equilibrium for any stock to be the space between the 8 and 21 EMA on that chart. So when a stock is trading right in or at or in between its 8 and 21 EMA, that is a stock that is trading at technical equilibrium. When you look at a stock like AMD that's trading at $112.50 with the 8 EMA at 102.50, this stock I would say is extended from the upper band of our equilibrium by $10. That means I don't want to buy it because it's too extended. So the thing about an extended stock is it can always become more extended. That's the definition of what momentum is. But eventually, I promise, this AMD price action, even though it can continue for longer than you would expect, it already has continued for longer than I would have expected. But the example I love to go to is JKS back here in this last September when it just kept going and going and going and going and going. This was insane. That can happen. An extended stock can always become more extended, but eventually extended stocks have to correct through time or price. So Brian, definitely gonna, for a longer explanation, more detailed explanation on how I utilize these moving averages, you gotta watch my training program classes. They are not support and resistance levels. Robert here repeating the Discovery earnings report from this morning. So they beat on the EPS by 18 cents. So let's just analyze what that means, right? So whatever the earnings expectation was, the EPS expectation for Discovery was, which isn't mentioned in this particular post that Robert copied and pasted here, they beat it by 18 cents. They also beat on revenue, at least not initially here. It is the amount even posted or how much they beat it by. They report second quarter earnings at $1.01 per share, excluding non-recurring items. So 18 cents. Okay, so here it is. So the Discovery report beat earnings, right? They reported $1.01, which is 18 cents better than the consensus of 83 cents. So that's a beat on earnings. Revenues rose 20.5% year over year to $3.06 billion. Versus the $2.9 billion consensus estimate. So revenue beat by $0.08 billion on Discovery. Then a little additional information here. The CEO said Discovery delivered very strong results this quarter as we executed well amidst a recovery. Global advertising market, advertising revenue increase in every whatever, and then it kind of gets cut off there. So Robert's information here is basically providing two of the four factors. So they beat on EPS, they beat on revenue, but this particular post, a lot of times we have that early on in the day today in the VTF, does not talk about the guidance numbers. And again, the guidance numbers are even particularly more important than the actual beating and missing. Kevin here is new to the team. Welcome, welcome, welcome. The afternoon meeting is at 10 after 4 Eastern time every day, right after the market closes. We take a little 10-minute break. Dave here, do you have any other classes beyond those? Dave, I think all my classes are posted in the Derrick Goldsmith classes section at T3 Live, except the routing class is not in there yet. We basically just took an afternoon meeting that I did recently where I spent an hour and a half talking about routing, and we're getting that posted. It should be in there soon. And I don't think I have an IPO class in there. And actually, there's one other class, like my big market themes, I don't think is in there either. So we've got one that's going to be in there soon. We've got 2 more that I need to do. So I'll work on that. Chris Algieri, Rich asking me who I'm seeing at Madison Square Garden tonight. My buddy Chris Algieri is fighting at Madison Square Garden tonight. He was a 2-time world champion kickboxer. I was a sparring partner with him for many years. Then he became a professional boxer. After being a pro kickboxer, he switched to pro boxing. He beat Ruslan Provodnikov for, I believe, the WBO world title at the Barclays Center some years back, where he was a huge underdog. It was one of the best fights I've ever seen. He shattered his eye socket in the first round and went the distance and won against the guy that everyone was afraid of. Then he lost to Manny Pacquiao in China, which was like a big payday for him, though, which was solid. And now he is coming off a 2-year hiatus. He's getting back in the ring here. My wife would kill me if I got back in the ring. For people who don't know, I used to fight professional kickboxing. I was a 2-time world champion. Some of you guys have been to my fights. Will here was at one of my fights back in the day. Yeah, so I'm gonna be watching Chris tonight, and I gotta head over there. Yeah, he's definitely solid. Thanks, Rich. All right, gang, we're gonna wrap it up. Good day. You know, I've just been so proud of you guys, because even on more difficult trading sessions, it seems like as a team every morning, whether it's my idea or it's some of your ideas, we're finding the diamonds in the roughs in the morning meeting. You know, the snow idea, the hood idea today, and what was otherwise a kind of a difficult trading session based off of the gap up, the opening sell-off, the support hold. That's really when you want it to come in and put on your risk. You know, we're still finding the trades out there on a day-to-day basis, so it's a fantastic job. I love to see it. Let's keep it up, keep learning, and I will I'll see all you guys tomorrow. Have a great evening.